Good afternoon and welcome to Options Center. It is Friday. It's going to be a little bit more difficult to hear me. I don't have a setup here. We are on vacation and I'm going to do my video pretty short and sweet just so we can get this information. We're coming into a critical area here and looks like a buy zone to me. So we'll go through that. We're going to start off on the monthly time frame, go through SPY all the way down to 65, and then we'll check out quickly Boeing. We're looking at Boeing as if you're a Patreon, you've already received the trade alert the last couple days. We're long Boeing, PayPal, Tesla, Square, and also QQQ, TQQQ, and SPY now. Going into this correction, we have all of our put hedges taken off, and we're looking to go long into the FOMC meeting coming up in 2 weeks here. So let's go ahead and get into it. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. Thanks for all the support and all the likes. And if you want to support this channel, I encourage you to please become a patron, $3 a month, to help support this YouTube channel, keep it going. I get all these trade alerts and things like that. So let's continue to grow the channel. Here we go. We have SPY on the monthly time frame. You see this candle here. We can adjust it. We can adjust this trend line from 2000 to touch this 2022, but this can be adjusted a little bit lower. Not using the wicks of these candles previously. I'm not going to do so yet because I do think that the trend is still up, and I think we have higher targets to reach, and we're going to cover those targets. So as of right now, we're not yet to the upper trend line, in my opinion. And we are above this 8 EMA. The 8 EMA is what we use as a trend indicator on all time frames. So the monthly time frame, the trend is still up. We're back inside the monthly time frame from last month. This big consolidation area. I do think we're back testing. I think we'll move a little bit higher, and I'll show you why in these lower time frames. So although I do want to, keep in mind we have divergences everywhere in all time frames. So one more move up or possibly two more moves up could complete this entire move before we have a hefty, in my opinion, recessionary period of time. So let's move down to the weekly. I'm not going to show you all. I'm not going to show you all the indicators because they all point to negative divergence, every single one of them. So on the weekly time frame, again, we're using the top of the wick from the 2022 high there. Didn't quite get to our confluence. We said we might go straight up or correct first. Now we're into that 8 EMA perfectly with this back test, and I think that's a test of this trend. And I think we do get our reversal from this point. So a nice evening star reversal to get this correction here and to test this trend line. So yes, this possibly, now that we have the reversal, could be the end of this move. But as we go into the lower time frames, you'll see where we'll know if we're wrong or not, taking these longs. I think the downside is limited at this point. Let's go. And the targets up here, we're looking for the 540 to 545 zone going into FOMC, and not necessarily completed at FOMC. We might see a big up day on FOMC to complete that move. And like I said, I'll show you those targets. As a matter of fact, let's go over to this weekly time frame on the Elliott. So this is what we had projected the last couple weeks here. Possibly a correction. We're getting that right now. So that was our talk. We had talked about a few days ago coming into this 530, 531 zone here, time relationship with price. And remember, I said the time relationships don't tell us which direction. They're not directional. But when we come into these zones with price, and today being the 31st, being a big day, I think we get our bottom here. There's a slight chance that Monday we, have a few more points. Maybe we gap down and reverse with an engulfing into Monday. But I think, again, I think we're really limited. I think the 31st means something here. And we have the 30th and 31st confluence here. And it's, we have room, a few days room to consider when you're on the weekly time frame. But we have these time relationships on the lower time frames too. And I'll show you those. And so after we have our correction here on the weekly time frame, the next move, the higher level, we had gotten to the target at the 27.2, 127.2 extension of this move here, this entire move in 2022. And we're getting towards the 162, we're looking towards the 162 extension going into 560. I don't know if we'll get up to that point. There's another target in between, and that's the 540 and the 545, and I'll show you again on those lower time frames. But this on the weekly time frame, that's the point of view we're looking at. We're looking at the ultimate target being at 560. Let's go to the daily time frame. Trend is our friend. On this daily, we're looking at this large rising wedge, filling it out. What I have here is sort of the projection when and if we get to this 540 to 545 area. This is what I project happening if we want to get to the 560. So if we get another nice move up here going into and after the FOMC into this confluence area, I do suspect we'll break down from the wedge. And it's a matter of if we're going to hold and then make new highs, or going into the election, or if this is done, completed, break the wedge, maybe back test, and then head lower. Those are the two likely scenarios that I think we're looking at. But I do think that after we get our move here, we do have some room to go. If I move this trend line, this is kind of the benefit of the doubt line here, because we're touching the lowest point before making a new high. And so this line can be adjusted to the bottom of this move here. So if that were the case, then you have a few touches going up there, and we're in confluence with the 50 simple moving average. So you see we have a little bit more room to go if we go into Monday. Looks like about 517, mid 516 area would be kind of our lowest point that we're looking at, and testing that trend line as well. So that's what we're looking at for SPY. And then I do think going into the next couple weeks, we get up to about that 540, 545 area. And then from there, we'll have to see what happens next. But that's going to create another set of negative divergences on the daily time frame and on the weekly. So we'll have to pay attention to we'll probably have a nice large correction after that. And that will be a matter of whether we get a lower high or make a new high at that point. All right, with the FOMC, I know I don't usually talk about too many fundamentals, but getting up to this point here and the FOMC speaking, if there is some sort of pivot, if the Fed pivots, which means that if they decide to start lowering rates, then I think this is probably not 100%, but out of the question. I don't think we're going to make new highs after the Fed pivots. I think that's when we actually start our decline into a recessionary period. That would be typical. And then the secondary scenario would be to make new highs. If the Fed does not pivot, I think that the market will correct, end up liking it, and going high, and maybe we see a Fed pivot somewhere up here. Okay, for those who are new here, we've been looking at this primary scenario for an ending diagonal And if we decide to go correct and get new highs later on in the scenarios that I was just talking about in the last screen, up to 560, this might be counted as something a little bit different. You might have this as a 1-2-1-2 setup, and then 3-4-5-4-5. There's different ways you can count it. That's all speculation and structure, but the whole point is we have a market structure that's bullish and that's heading to the upside. So it doesn't matter how we count this. Just know that we're counting this up here as right now an ending diagonal. We have 3 waves up for 1, 2, 3, 4, and we're working on wave 5. And I think this might be our A, B, C to head higher. Okay, so again, we talk about these time zones, time relationships, and then targets here. So I have 3 targets above. We reached the 138 target at 530. Rejected off of it. I think we'll hold these supports. The previous 127 right here. Going into, we don't have the time frames on this level. It was on the weekly and the 65, but we're in that time frame now. So I think we see a bottom coming up here shortly. We might even today, towards the end of the day, spring back up. So just be careful on these moves. I'm starting to already work my positions in there, and if we go lower, I'll add some onto our calls. All right, so this I had this kind of projecting like before. We go down to these areas, and then I think we see higher positions. The next target would be the 150 on the daily time frame. We're looking at the 150% extension. That's around 545, like I was saying, 540 to 545 zone. And then we could either correct from there, and I think that's our likely spot that we'll get to is 545. But if the market wants to continue higher and fill out that wedge even more, you can go directly to 560. And we have some time frames out here as well. And as we get to these time frames, you see this cluster of vertical lines. That would be a very good spot to see some sort of correction. It could be sooner that we get to this 150. If we're talking about the FOMC, we have the 612. So let's say we start to get our, let me take that one out. Let's see if we start to get our bottom here today or Monday, then maybe the next 2 weeks we go into FOMC and we start hitting, that FOMC is on 612 here, and then we have a couple time relationships going into that area. So maybe the market goes a little bit higher because of FOMC. That's very typical for it to have a false move. We hit the target, and then we start heading lower from there. Okay, so I'll put this on here just so we can keep track of what we're talking about. We do these videos often, so make sure you hit that notification button. We kind of put all of these videos together as a storyline so we can see, so we can update what we're talking about, and constantly as we have more information coming out, we can see if there's going to be a correction coming up and see if we're going higher or whatnot. So I think this looks like a likely situation. We hold down this low here. We go up into FOMC, and FOMC either it considered a continuation move. Maybe it's much more, maybe the Fed pivot comes up this FOMC and the market just loves it and ramps all the way up to 560. Whatever the case is, we'll have to follow price into these time relationships, and then we'll look for a reversal at either this 150 extension and or, if depending on what the market does, the 162. Now remember, as we go into these catalysts, we know that something big is likely to happen. So just make sure you hedge on all these. But what's important is going into next week and the next 2 weeks, I do think we start to rise from this point. All right, let's go to 65 just real quick, and we'll check out those same kind of targets. Again, this is the traditional technical analysis. We're coming into the bottom here. We don't necessarily have to get there because we're at some Fibonacci retracements already. But if we gap down or so, this is the zone. We already have this time relationship today, and this is the zone that we're looking at for a bottom going into Monday. All right, anywhere from now until we have this kind of the benefit of the doubt line here that connects these two lows. This one is the actual trend bottom, so we're just a few points off of that. Maybe we get there by the end of the day. All right, and so just looking at the Elliott wave, we're right above that 382. When we take the arrow, we talked about getting down to this point here. So clean that up. We're just above that 382 retracement. That's a good zone for a buy. Again, that's in our zone right here, all the way down to the 200 moving average. Also, this 50% retracement, almost to the zone. Not quite there, but it doesn't have to get there. It could stop a little bit early and go up. So that's why we're starting to get into our calls now. A lot of the individual names are starting to hold up very well because the market is being taken down by just some of the mega large cap names. All right, so then here is what we're looking at after we get our bottom going into, I have highlighted in the purple, that's the FOMC. So it could be specifically this day that we get up to this target or not. With a 543 that coincides with that last target that I was talking about on the daily time frame. This would be our extension from this correction here that we just had. So I'll also actually I'll do it while we're on screen now. So we have this extension here, or we got to the 127.2 of this extension. All right, so that's what we're reversing off of right now. Now that we have this correction here, we're gonna have to maybe adjust this depending on how far the market goes down. But as of right now, we have I know it's getting real busy here, but we'll have our extensions here. So if the market goes down a little bit more, perhaps it comes down to this 200 and maybe even starts to go down there. But as of right now, we have from top to bottom, and then you have your extensions up here, and the 162 would be just about where we're talking about with this zone here. So I'll take that off right now, and I'll put that on later in a much more clear. I'll take out all those middle fibs, but just know that we'll have the new extensions and more targets and things when we know that we have confirmation of a low here. But it looks like it's going to be around this same point, about the 540 to 545 area. So that's what we're looking into some of these time relationships, and we'll be looking for these clusters around you have 613, 612, 614, and then I'm going to add on a couple more as we start to get some lows. And then I can go from the time relationships from the low to low to high, low to low here, could possibly get us our high. So some work to do going to the next week. So make sure you check out these videos a little bit later on. Okay, that's what I want to show you with SPY. We also have the VIX that's giving us cues that it's just about done with its move. It closed the gap here. It looks like it's struggling. We have the 200-day moving average. It looks like we'll probably get a reversal off of here and look to close down some gaps again and possibly make a higher low or get back to the extremes here. But that should allow the market to move higher at that point. Now, looking at Boeing, we're just going to do the daily time frame. We'll start from the weekly real quick. I'll just show you that we're really triangulating, getting into this kind of neutral position here. And then you have a possible inverted hammer. Now we are still, this is an early projection, but we're still underneath that 8 EMA, rejected off of it. So we're in it is a little bit risky trade here, but we have some support underneath us as well. So we're here at the daily time frame. We had this 62% retracement. It's a 1-2 setup here. And we're looking at also a 1-2-1-2. So we have the Elliott wave, and we're going into this smaller move here. We had a nice move breakout from a falling wedge, and we're back testing that wedge. I know I'm going through this quickly. And then we have a retracement for 1-2 setup. And then even on the 65-minute, we have a 1-2 setup here. So we have a 1-2, 1-2, 1-2 setup going into this move with the nice typical wave 2 pullback. And we'll be looking for, let's see, some higher targets. Certainly our next target should test this top here, but I think we extend much further than that at this point. I don't have the targets up there. We're going to have to revisit there. But with this being a 1-2 setup, we're looking at much, much higher. So this is, to me, this is a great long-term, intermediate, and short-term trade setup. Here's the 65-minute. We'll check that out. I know I'm moving quick, but we got some, me and the little one got some stuff to do here in Nashville, Tennessee. So we got to get going. We had this falling wedge, broke out from it. And what we're doing now is setting up an inverse head and shoulder. So this is a great setup. You have the left shoulder. And notice this channel, this blue channel that I have here, it shows some symmetry here between the shoulders and the neckline. So you have left shoulder, head, right shoulder coming back. And I think this right shoulder is complete. If not, you have one more move down here for another objective long play at the 169.35. That's also the expected move for the week. Just a real tight trade action here. I think we'll get our move going into next week. And if we break this channel, that would be the neckline. Then we're off to the races. And there's other ways to, looks like the application's reconnecting. So yeah, just the connection here. I'm going to end it here, you guys. We'll recheck some of these things later on. I'll revisit these next week. Sorry about the, yeah, sorry about that. We're going to get going. Thanks for joining us here at Options Center. Don't forget to like the channel. Don't forget to like the video. Don't forget to support with the Patreon. Talk to you soon.